Wall Street isn't just a place, it's a symbol of wealth, ambition, and risk. But behind the flashing tickers and billion-dollar deals lies a history filled with triumph, greed, and even disaster. In this video, we're uncovering the history of Wall Street, from its humble beginnings under a wooden stockade to becoming the financial powerhouse that shapes the entire world. And trust me, some of its darkest moments will shock you. Before we dive in, don't forget to like, subscribe, and tap the bell, because understanding money's past is the key to understanding its power today. Where is Wall Street? Wall Street is located in the financial district of Lower Manhattan in New York City. It runs eastward from Broadway down to South Street and the East River, spanning just 8 blocks. Despite its modest length of only about half a mile, this narrow street has become synonymous with American capitalism and global finance. The street itself sits at the southern tip of Manhattan, surrounded by some of the most iconic financial buildings in the world, including the New York Stock Exchange at number 11 Wall Street and the famous Federal Hall at number 26, where George Washington took his oath as the first president of the United States. The area gets its name from an actual wall that Dutch colonists built in 1653 to protect New Amsterdam from British and Native American attacks. This wooden stockade ran along what is now Wall Street, serving as the northern boundary of the settlement. When the British took control in 1664 and renamed the area New York, they eventually tore down the wall in 1699, but the name stuck. Today, the financial district surrounding Wall Street houses not just the stock exchange, but also the Federal Reserve Bank of New York, numerous investment banks, law firms, and corporate headquarters that collectively manage trillions of dollars in assets. Alexander Hamilton and the foundation of Wall Street. Alexander Hamilton, America's first Secretary of the Treasury, was the architect who transformed Wall Street from a residential street into a financial powerhouse. After the Revolutionary War, the young United States faced crushing debt and no established financial system. Hamilton saw an opportunity to create a robust economic foundation that would rival European powers. In 1790, he established the first Bank of the United States and created a market for government bonds, essentially inventing American public finance. Hamilton's vision was revolutionary for its time. He believed that a strong federal government needed a strong financial system, and he chose Wall Street as its home. He convinced Congress to assume all state debts from the Revolutionary War, consolidating them into federal bonds. This created America's first securities market, as these bonds needed a place to be bought and sold. In 1792, just 2 years after Hamilton's financial system took shape, 24 stockbrokers gathered under a buttonwood tree on Wall Street and signed the Buttonwood Agreement, establishing rules for trading securities. This agreement became the foundation of what would eventually become the New York Stock Exchange. Why Wall Street is so integral to the stock market. Wall Street's dominance in the stock market didn't happen by accident. It became the epicenter of American finance through a combination of strategic location, historical momentum, and institutional development. The New York Stock Exchange, founded on Wall Street in 1817 as a formal organization, grew to become the world's largest stock exchange by market capitalization, currently listing companies worth over $30 trillion. This concentration of financial power created a self-reinforcing cycle where capital, talent, and information all flowed to Wall Street. The street's importance lies in its role as a capital formation machine. Companies from around the world come to Wall Street to raise money through initial public offerings, giving ordinary investors the chance to own pieces of businesses and share in their growth. This democratization of capital, while imperfect, has created enormous wealth and funded innovation across every sector of the economy. Wall Street doesn't just facilitate trading, it allocates capital to its most productive uses, funding everything from small startups to massive infrastructure projects. The price discovery mechanism that happens on Wall Street every trading day determines the value of companies, influences corporate behavior, and affects retirement accounts for millions of Americans. What happened in the Wall Street crash of 1929? The Wall Street crash of 1929 remains the most devastating financial collapse in American history. marking the beginning of the Great Depression. Throughout the 1920s, often called the Roaring Twenties, stock prices had climbed to unprecedented heights. Speculation was rampant, with ordinary Americans buying stocks on margin, meaning they borrowed money to purchase shares, sometimes putting down only 10% of the stock's value. The market seemed to only go up, creating a dangerous bubble built on borrowed money and irrational optimism. By September 1929, the market had reached stratospheric valuations that bore little relationship to underlying economic fundamentals. The crash began on Thursday, October 24, 1929, a day known as Black Thursday. Panic selling erupted as investors suddenly lost confidence, and 12 million shares changed hands in chaotic trading. Leading bankers tried to stabilize the market by purchasing large blocks of stocks, temporarily calming fears. But the respite was brief. On Monday, October 28, the market fell another 13%, and then came Black Tuesday, October 29, when 16 million shares were traded and the market collapsed entirely. In just 2 days, investors lost $30 billion in value, equivalent to roughly $400 billion in today's money. Millionaires became paupers overnight, and ordinary families saw their life savings evaporate. What is the future for Wall Street? Wall Street faces an uncertain future as technology, regulation, and shifting social values reshape finance. Electronic and high-frequency trading have already replaced the old trading floors, with networks of algorithms making lightning-fast decisions. This transformation raises doubts about whether Wall Street as a physical location will stay relevant or fade into a fully virtual system. Cryptocurrency and blockchain further disrupt the landscape. Digital assets like Bitcoin and Ethereum challenge Wall Street's dominance, while blockchain offers the potential to revolutionize how trades are settled and recorded, cutting out much of the traditional infrastructure. Opinions remain divided, with some embracing crypto and others dismissing it as speculation. Meanwhile, environmental and social concerns are pushing Wall Street to change. Investors now demand attention to climate risks, sustainability, and corporate responsibility alongside profits. Ongoing debates about regulation, executive pay, and financial risk show that Wall Street must evolve, not just to survive, but to stay trusted in a rapidly changing world. From crashes that shook nations to booms that built empires, the history of Wall Street proves that money has always come with both opportunity and risk. Which chapter of its history surprised you the most? And do you think Wall Street's power is still growing today? Share your thoughts in the comments. I'd love to hear them. If you enjoyed this journey through financial history, hit like, subscribe, and share this video with someone curious about money and power. Until next time, stay curious, stay cautious, and remember, on Wall Street, fortunes are made and lost in a heartbeat.